Good morning, everyone. A warm welcome to our presentation. Today, Group 3 is excited to share comprehensive technical analysis. Before we dive into the data, let me introduce the members, my name is Nurain binti Endrat, who will be presenting YTL Power International Berhad, Denzel Leo Fedrich, who covered Inari Emerton Berhad, and Eva Darul Rahma, who analyzed Nestle Malaysia Berhad, Nur Munira Hussein, who evaluated as the Gluteri Berhad, and Nur Zainab Damit, who focused on Maybank. Now let's look at the dreadlock to support YTL while high growth sector like data centers and AI capture and the headlines. It is actually the regulated merchant utility assets across Singapore, the UK and Malaysia. The fuels, the fires, also deliver massive, highly reliable revenue flows and finance their technical expansion. Technical analysis where we use MACD and stochastic oscillator. Now let's pivot to the charts to see what the technical indicators are telling us. Starting with the MACD using standard 12, 26 and 9 periods. Our current MACD line sits at 0.083 and comfortably above the signal lines of 0.058 with a positive histogram at 0.025. Because lines are sustainability above the zero base lines, it signals an incredibly strong and presents medium-term bullish momentum. Now, looking closely at the stochastic oscillator, the readings are sitting high with %K at 83.33 and the D % at 4.44, firmly push stock into overbought territory and pricing. Just now aggressive, the recent price advance has been a tiny bearish crossover at the very top, where the K % and D % is telling us underlying trend remaining incredibly strong. The stock is temporarily overbought, and we might see a short-term pause or a mirror consolidation coming up. Moving on the relative index RSI with a standard 14-period look back. The RSI is currently at 95.19, having clean broke above this yellow moving average lines, where this place is stuck in very healthy bullish expansion zone. So crucially, because it is still below the traditional overbought threshold of 70, the stock normally still have room to run before it becomes fundamentally exhausted. Finally, let's look at the ROC over the 9-day period, sitting at the positive 5.24. The rising ROC confirms that the stock price velocity is actively accelerating compared to the 9 days ago. This strong momentum heavily supports the current price breakthrough attempts. So, in summary, YTL Power International combines rock-solid utility fundamentals with powerhouse market momentum. The indicator aligned to show aggressive bullish healthy with only minor short-term overbought signal to look out for.
A very good morning. My name is Denzel Leo Fletcher, matrix number 2025-186643, and today we will be talking about the technology sector. The company that I decided to choose is Inari Emerton Berhad 0166. Now let's dive into a little bit about what the company is. Inari Emerton Berhad is a Malaysian semiconductor company that provides outsourced semiconductor assembly and test services with a strong focus on radio frequency and electronic components. Established in 2006 and based in Penang, Inari develops and tests semiconductor products for global technology companies, focusing on areas such as wireless communication, automotive electronics, and consumer electronics. The company is a part of a semiconductor supply chain, assisting chip designers and manufacturers with packaging and assembly and testing their products before they hit the market. Now, without any further ado, let's move on to the stochastic oscillator. The current values shows that this stochastic oscillator displays a %K line at the 3.2 and the %D signal at the 50.67. The trend interpretation is that a bearish crossover is active with a faster %K line crossing below the slow orange %D line. The context for the momentum is that the oscillator is sliding downwards from the overbought region above 80 seen in early June. As it heads steadily towards an oversold territory which is below 20, it indicates that the short-term selling pressure is currently overriding and preceding up. Next, we have the moving average convergence divergence, or MACD for short. The current values and trend interpretations. The MACD indicates that the line at 0.046, the signal line at 0.063 and the histogram at negative 0.016. What this means is that a bearish crossover has recently occurred as the blue MACD line has crossed below the orange signal line. For momentum context, the histogram has gone negative, which means that the red bars are now going down, which confirms that the bearish has changed. Technically, the two lines are still above the zero baseline, but the downward slope of the lines suggests that the recent advance is losing steam, hinting at a near fall in the future. Next, we have the rate of change, or ROC. The ROC is currently sitting at 1.85. What this shows is that the indicator remains in slightly positive territory, floating just above the zero line. What this means for the momentum is that despite remaining in a positive, the ROC has sharply declined from its recent peak in May and June. This steep drop highlights that the velocity and the price increase has slowed down considerably, confirming a deceleration in trend strength and suggesting that sideways consolidation. Last but not least, for this company, we have Relative Strength Index, or RSI. The current values show that the RSI is currently reading at 51.40. What this means is that the RSI is cleanly retreated from the overbought levels above 70 it occupied over the previous months. So for context, resting right at the 50 midline, the RSI reflects a perfectly neutral momentum state. The stock is neither overbought nor oversold, signifying a wait-and-see consolidation phase as the market digests the recent gains and awaits for the next directional catalyst.
For my portion of our presentation, I will be analyzing the technical landscape of Nestlé Malaysia Berhad. Before diving into the indicators, let's establish the fundamental context behind the stock. As shown here, Nestlé Malaysia is leading powerhouse in the FMCG sector, driven by household staples like Milo, Maggi, and Nescafe. Because it provides essential products with highly stable consumer demand, Nestlé operates as a classic defensive stock, offering excellent stability during broader market volatility. However, even defensive blue chip experienced corrections. The stock is currently trading at 92 ringgit, marking a significant downtrend from its highs near 120 earlier this year. The good news is that the downward pressure is finally pausing. The price action is entering a consolidation phase, finding a solid support floor right around this 22 ringgit psychological level. Our technical analysis will determine if this flow is ready to hold. As shown here, Nestlé Malaysia is leading powerhouse in the FMCG sector, driven by household staples like Milo, Maggi, and Nescafe. Because it provides essential products with highly stable consumer demand, Nestlé operates as a classic defensive stock, offering excellent stability during broader market volatility. However, even defensive blue chip experienced corrections. The stock is currently trading at 92 ringgit, marking a significant downtrend from its highs near 120 earlier this year. The good news is that the downward pressure is finally pausing. The price action is entering a consolidation phase, finding a solid support floor right around this 22 ringgit psychological level. Our technical analysis will determine if this flow is ready to hold. Next, we must cross-reference this early signal with our trend-following indicators, the rate of change and the relative strength index. This tells us if a true trend change is actually taking hold. Looking at the 9-period rate of change, it sits at minus 4.39. Remaining below the zero baseline confirms that short-term momentum is technically still negative compared to 9 days ago. However, notice that the ROC line is flattening and the curving upward, showing that the downward velocity is slowing down. Meanwhile, the RSI stands at 39.29, trading below its yellow moving average of 46.24. This keeps it in the bearish control zone, meaning buyers have not fully reclaimed the trend, though it did manage to avoid falling into panic territory before 30. Synthesizing this trends indicator with our leading ones gives us a clear conclusion. While the RSI and ROC warn us that a long-term structural bull run is not fully reconfirmed yet, they heavily reinforce that the aggressive selling has paused. The downside risk is heavily mitigated and the 92 ringgit level is proving to be a highly reliable near-term foundation. That's all from me. Thank you.
I will be presenting our stock analysis on SD Katri Berhad, formerly known as the Sam Darby Plantation. SD Katri operates in the plantation sector and is one of the world's leading sustainable palm oil producers. Within our investment portfolio, this stock plays the role of a defensive commodity hedge, as a plantation company tends to provide more stable performance during periods of market uncertainty due to the consistent global demand for palm oil and agricultural products. Now, let me begin with an overview of the company. Firstly, SD Guthrie focuses on a sustainable palm oil production through integrated upstream and downstream operation. The company is also expanding its downstream product while investing in renewable energy and ESG initiative. At the same time, it continues improving operational efficiency to support long-term growth and create value for shareholders. Now, let's look at the company's recent financial performance by comparing financial year 2024 and 2025. Overall, these results show that SD Guthrie delivered a stronger financial performance in 2025 compared to 2024. Moving on to the company core strength. SD Guthrie, on one of the largest plantation land bank in Malaysia, benefit from strong cash flow generated through its integrated business model. The company also has operations across Malaysia, Indonesia, and Liberia, providing geographical diversification. In addition, its strong commitment to sustainability and ESG practices enhance its competitiveness and long-term resilience. Looking at its market position, SD Guthrie remains one of Malaysia's largest listed plantation companies. As shown in the chart, it has one of the highest market capitalization among major plantation companies, demonstrating its strong position within the industry. Based on its improving financial performance, resilient business outlook, and attractive valuation, SD Guthrie remains to be well positioned for the sustainable growth. Therefore, our investment view for this stock is hold or accumulate, particularly for investors seeking long-term and stable returns. Now, I will move on to the technical analysis using the relative strength index (RSI) and rate of change (ROC). Starting with the RSI, the current value is 52.91, which is slightly above the signal line at 51.77. This indicates the stock is trading around the neutral zone, suggesting a balanced buying and selling pressure. It is neither overbought or oversold, which reflects stable market sentiment. Next is ROC. Value is negative 0.98, indicating a slightly weakening in short-term momentum. However, the decline is relatively small and suggests that the stock is experiencing a normal consolidation phase rather than a strong downtrend. Overall, the RSI remains neutral while the ROC is only slightly negative, indicating that the stock is consolidating before its next. I will discuss the MACD and the stochastic oscillator. For the MACD line is slightly above the signal line and the histogram has started turning positive. This indicates that bullish momentum is gradually building, with the potential of bullish crossover if buying pressure continues. Looking at the stochastic oscillator, the percentage of K value is 35.14, which is above the percentage of D value of 29.73. Both indicators are recovering from the oversold condition, suggesting that buying momentum is strengthening and the stock may continue moving upward. Considering all of four indicators, RSI, ROC, MACD, and stochastic, the overall technical outlook for SD Guthrie is moderately bullish. Therefore, our technical recommendation is hold or accumulate, as the stock shows early sign of recovery while maintaining strong fundamentals.
Last but not least, I will be presenting the technical analysis of Maybank. Maybank is Malaysia's largest bank and one of the biggest company in FTSE Bursa Malaysia KLCI. It also operates in Singapore and Indonesia. Recently, Maybank changed its strategy in Indonesia by reducing high-risk loan and focusing on more stable corporate lending. Although this is expected to improve its long-term performance, it has raised short-term earnings concerns, causing the share price to fall from 12 ringgit 42 cents to around 10 ringgit 70 cents. Based on the price chart, Maybank is currently in a short-term downtrend. However, the trading volume remains low, which suggests investors are not panic selling. This indicates that the stock's long-term upward trend is still intact. Now, let's look at the technical indicators. First, the RSI is 38.50, showing that the stock has been losing upward momentum. The signal is bearish and is approaching the oversold level of 30. This means sellers are still in control, so investors should wait for the RSI to fall below 30 and then move back above it before considering a buy. Moving on to the stochastic oscillator indicator, Maybank is now in the oversold zone with the K line at 18.2 and the D line at 22.4. Although the signal is still bearish, the oversold condition suggests a possible short-term rebound. A stronger buy signal will be when the K line crosses above the D line while both remain below 20, especially near the 10 ringgit 60 cent support level. Next is the MACD indicator. The MACD indicator gave a bearish signal after the MACD line crossed below the signal line on 22nd June. Both lines are now below zero, and the negative histogram shows that selling pressure is increasing. Investors should wait until the MACD crosses back above the signal line before buying. Lastly, the rate of change or ROC is negative 4.3%, meaning the current share price is at 4.3% lower than it was 14 trading days ago. Since the ROC is below zero, selling pressure is still strong. Investors should wait until the ROC starts moving upward and crosses above the zero line before entering the market. In conclusion, all four technical indicators currently show a bearish short-term outlook. However, because the stock is approaching oversold level and the long-term trends remain intact, investors should wait for confirmation signals before buying Maybank shares. This portfolio delivers a powerful barbell strategy, perfectly balancing aggressive growth with rock-solid defensive income. For high conviction upside, YTL Power is your primary engine, systematically buy the pullbacks to capture its massive multi-year AI infrastructure boom. Pair this with Inari Emerton, maintaining a patient stance and accumulating slowly near key support levels to ride the upcoming cyclical tech turnaround in datacom and AI smartphones. To shield your capital, let SD Gathering act as your core inflation hedge, unlocking immense underlying value through the aggressive monetization of its land bank. Finally, anchor everything with Maybank and Nestlé Malaysia. Maintain a dominant allocation in Maybank as a permanent dividend machine to opportunistically fund your growth plays, while holding Nestlé as the ultimate defensive safe haven to flawlessly preserve your capital during broader market shocks. That's all from us. Thank you for watching.